Let me kind of point that out a little bit more because we as traders, we think we're geniuses and we say, well, we know it's going to continue to go up. And so I'm just going to play, one side or the other. In this case, it was obviously we would have just sold the put side. Well, if you
Hmm.
did that, by doing that, you actually giving yourself more risk because that call side, if you put it on, even if you put it on for a little bit, it's still going to offset some of the losses to the downside if it drops the way it did. There we go. Hey, Dr. Metals, what's going on this afternoon?
Well, I posted in Discord, kind of
Mhm.
a classic, well, somewhat classic recovery situation.
Okay, I figured I was saying on the call this morning before we got off that you probably got stopped out when we had that big drop earlier in the day after you put it on.
Yeah, exactly. So, yeah, kind of color coded it just to kind of
Okay,
walk
let me
folks
make it
through.
a little bigger here. There we go. There we go.
Yeah.
Walk me through it.
The initial positions was at the 6,300 and the 6,200. Okay, those was in red.
Hmm.
So I had basically like 1,000 of risk on both sides. And when I got stopped out,
You mean a
you'll
thousand of
notice
credit you can
a
receive?
credit.
Okay.
Yeah,
Okay.
yeah. And so you see when we hit the stop out there, you
Hmm.
see where I'm down on the put position and up on the call position. And that's about where I should be. I should be kind of minus $1,000
Hmm.
with the 3x loss.
Hmm.
And
So if you
so,
would have stopped it right now, if you would have just said uncle or whatever, it didn't come back in,
mhm.
you would be down $1,000.
Right, which is what you want to do when
Hmm.
that's what you have on either side with a 3x loss. You know what I
Okay.
mean?
Okay.
Yeah.
Perfect. Perfect.
And so then you wind up re-entering at the 6290
Mm.
and the 61,770. Okay.
So it looks
And
like you went here first. This yellow here, you put it here for,
yep.
okay, perfect. So you put
First.
it there
Yep.
and then you put
Yep.
it this here. Okay, perfect.
Correct. Right. So again, this is the re-entry situation where, if things work out. Now here's the deal.
Mhm.
You've got to stay in the trade longer if you're going to really recover and still come out profitable, right? I got a little nervous. I saw the red thing with the FOMC. I think it was just an announcement today or a press release, but no conference,
Yeah,
no.
it was the minutes.
Right. And I
Yeah.
wasn't really sure what to make of that. And interestingly, like the premiums seem to come out of these new positions pretty well, right? To the
Mm-hmm.
point where I actually felt comfortable putting on, you see that the stuff in blue, those were kind of like half positions on both the put and the call side. Like I didn't want to roll up anymore, you know.
Okay. Okay,
I just
nice.
but I wound up just putting on a little bit more risk and things worked out. I
You
I
look like you
I
already
got
took it off too, huh?
yeah, I'm out. Yeah,
Yeah.
I'm out. Yeah, actually. So now I would have recovered and still been mildly profitable with just the
Mhm.
yellow positions, but I kind of wanted a little bit more. So again, you go from being minus on the day to being positive with some adjustments. And of course, what I what
How,
I
how
had
much
like
how much
now
would you, I'm sorry,
I'm at
continue.
like plus 1,600 for the day. So
Okay,
it's what it
okay.
looks like. And again, in retrospect, my call of thinking that we were just going to go straight up and all that, it just in
Mhm.
the market really reversed. And again, if I would have just gone one-sided, right, and not put on that call position, which is something I was tinkering with, you
Mhm.
remember I was on the call earlier, I'd be down the 1,700 as opposed to just down the 1,000. You see what I'm saying? So again,
Absolutely.
one-sided is always riskier than two-sided for this kind of trade, you know.
Let me kind of point that out a little bit more because we as traders, we think we're geniuses and we say, well, we know it's going to continue to go up. And so I'm just going to play, one side or the other. In this case, it was obviously we would have just sold the put side. Well, if you
Hmm.
did that, by doing that, you actually giving yourself more risk because that call side, if you put it on, even if you put it on for a little bit, it's still going to offset some of the losses to the downside if it drops the way it did. So
Right.
in this case, it obviously offset it by $726. Before fees and all that, but that's
Hmm.
that's how we can all kind of see things equally. This is a great point, Dr. Meadows, is that intellectually, or at least for us as geniuses, we think that okay, just picking one side is safer, but in all reality, it's not. And with at least with this zero DT trade, playing both sides is safer because we don't know what's going to happen, regardless of
And
our gut feeling, our technical
right.
analysis, whatever.
Exactly. And I mean, things seem so strong early on, right? It seemed like it might be one of those days where we're just going to go straight up, right? And
Hmm.
honestly, earlier in my career, I might have, been more tempted to be like, yeah, I know which way we're going to go. You never know. As strong as we started off, yeah.
Absolutely. And sometimes I can say stuff that make it seem like I know where something is going. It's all just speculation, you guys, and it's just talking and entertainment, even though I might truly believe that. But I'm never dogmatic about that stance though, because if you trade long enough, you understand you're going to be wrong a lot. And if you're dogmatic, you're going to be out of this business. So you have to be willing to be flexible and adjust your assumptions or your take. And so one of the things I love about Dr. Meadows is that yeah, sometimes he'll play a direction, right? But most of the time it's going to be this iron condor that he teaches in the course, the statistical day trading course. It's going to be that. And you guys see it's almost 100% of the time when you see me put on this type of trade, it's going to be an iron condor. And even sometimes it seems like that call side or you shouldn't even put it on because it's just a little premium on that call side. Put it on anyway, right? It's going to offset some of the issues if it drops. Before we continue with the video, I just want to quickly point out that if you're interested in learning more about the zero DT strategy or any other of the strategies that we teach here at Dorian Trader, you can check out our Dorian Way School. We're going to put the link in the description area. It will help you accelerate your learning process. Thanks for listening. Now back to the video.
And I would also add that having the patience for something to play out, because I feel like that's my superpower. I didn't address my zero DT trade at all today, and it went smoothly.
When did you put it
Well,
on,
yeah,
Dr. Christina?
I put the same trade on that you did at 9:35 a.m. for a
oh wow.
$1.35 credit, and
Okay.
I closed it at 20 cents at 206.
So to put it on that early, how did you manage to not get the stop out when we had that kind of pretty significant decline? I
I
forget when it
didn't,
happened. Maybe go ahead.
I didn't do a stop out because I was watching the computer today. I only
Okay.
do that.
Ooh,
I only do that if I'm not watching it.
Yeah, you you
okay.
you you say you would do that, Dr. Meadows, if you had time to
Yeah.
just watch it.
Yeah, if I
Yeah.
had time to watch it,
Yep.
yes. Now
Today
for the
was one of
sake
those days.
now for the sake of the folks on the call, I
Uh,
won't officially endorse that, but yeah.
yes, yes, yeah, I
Because
like that.
no, in all seriousness, things could go left really bad. If what I mean, if the market moves so much. But hey, there you go.
And so absolutely. So what happened with your trade? Because I had the same trade. It probably went barely into what we call the red zone.
Yeah.
Probably. Maybe it never did. But the reason why I adjusted it, and I kind of pointed out to the people in the cohort that I would have been a lot better not doing anything. And that's what happened with you, Dr. Christina. You didn't. It's not that you won't adjust it, but in your mind, it wasn't a big enough move yet to justify the
It was
adjustment.
still 20 points away.
Okay.
That's the
Okay.
lowest it ever got was 20 points higher.
Okay, okay, perfect, perfect. And so that allows you to hold it a little. Maybe if it would have got to 15, maybe you would have made your
I
little
would
adjustment.
definitely have adjusted it if it got
Okay.
closer.
All right. And so what I did was I adjusted it 5 points and then I moved up the call side and paid for it. And so I could have got more, but for my game is that when the market kind of shows me it can make some really big moves, I will take my profits. So I didn't get what I wanted, but I got a decent profit on that zero DT trade and kept it moving. And do you guys know with the one DT trade, we for me at least the way I teach it is that once that 10 o'clock Eastern time comes, and I don't have my profit at that point, I'm not trying to go for what I originally wanted, which is let's say 50 to 70%. I'm just trying to go for at max 35%. And I'm going to get out of it if I get that profit again later in the day. And so that's what happened after adjusting it. I was able to get out of that one DT trade and then just move on to the next one, right? Because that's how I have these ridiculous high win rates. And if I can just avoid the big losses, these things can easily have, 50, 75, 100% gains in a calendar year easily. So, with that said, any questions for Dr. Meadows or any questions for Dr. Christina or anything you guys want to add, Dr. Meadows or Dr.
Well,
Christina?
I guess the thing I'd add is that, I'm more of a risk taker than
Mhm,
probably some. And I use my Fibonacci's. And even though I got close to one of
mhm,
my areas, it never broke into it. And I
mhm,
stayed on and I'm coming away with almost 100% of the money that I put in. Now I use NDX, as you know, because
mhm,
I will play that. And
mhm.
I'm not saying it's right for everybody, but that's what's worked for me.
Now you're doing that as if you're doing zero DTE in
Yeah,
NDX.
yeah, yeah.
Now,
And
how are you handling? Yeah.
it's boring, but that's all right. I mean, I'm walking away with doing one contract,
Okay, one
and
contract. Okay.
one contract, and I'm walking away with about $3,000 a day
Per day with one
per day.
contract. Okay. Now I'm just curious. What
With
are your
one
short
contract,
deltas?
Yeah, I'm sorry, no, $300. I'm sorry, $300 a day.
Okay, okay.
Yeah, I'm sorry,
Okay, okay.
300.
Okay, one contract. Okay. Now, I'm just curious. I mean, because NDX it's tempting on some fronts, but as far as the spreads and everything, like I'm looking at the option chain right now, and the spreads are 30, 40 cents wide and that kind of deal. So like,
Mhm.
how are you handling? I mean, are you using stops, or you're just saying like, hey, if my contract size is so small, I won't count on a
I'm using
stop.
the Fibonacci's. I'm not using stops, and I'm looking at my
Mm-hmm.
Fibonacci's, and I'm
Mm-hmm.
just saying, okay, am I in the zone where I need to go and adjust
Mm-hmm.
something? And most of the
Okay.
times I am not. I think
Mm-hmm.
out of 40 trades I've done, I've only had to adjust once.
How wide are you doing the trade, DeVille?
I'm doing them 30 strikes wide,
30 strikes wide, okay.
and I'm working off of the deltas, and I kind of take a feel for where's the market going to go because I'm up at 6 listening to the news and all that,
Uh-huh.
and maybe I will do a 10 delta on one side and an 8 delta on the other, but I'm usually around the 10 or below deltas.
Okay. So only
Oh
thing I
yeah,
want to say about that scenario for everyone on the call, right? I'm giving my Dr. Meadows disclaimer,
okay.
is that when you're not doing it the way Dr. Meadows teaches it with a stop loss, you're going to have to be crazy disciplined, right? One of those 3 Ds that we talk about when you do it.
Yep.
Because if you don't, you're going to blow up your account because you do have that risk of blowing up your account when you don't have that stop loss on. And if you get in a situation where the market moves too fast and you panic, then you can wind up hurting your account a significant amount. So you have to be really, really disciplined and vigilant and understand what's going to be your move immediately if something drops fast, right? And, it's usually the drop side, but it could jump up fast. So you have a feel for what's going on with the markets, DeVale, so you probably wouldn't put on this type of trade when the market could jump up the way it did in April or drop the way it did in April. When it has that type of possibility, you don't want to be playing with no stop losses, in my opinion. So
Mhm.
um, that's my disclaimer. Dr. Meadows has been trading this for 5+ years, and he's never had a loss. And if I'm not, correct me if I'm wrong, Dr. Meadows, if you're still on the call, I don't think he's ever had a loss more than $6,000, and never the possibility of ruin or blowing up his account because of that discipline. I can honestly say to myself, the only way that keeps me from blowing up an account is because you guys, number of you know I use the alerts, right? I don't use the stop loss, and obviously I'm going by deltas, but I'm also going by alerts. But I know that it could be a time where it doesn't matter that the alert is there. The market just drops like a rock, and okay, well if I lose, then it's still not going to put me out of business because the most I can lose is less than 20% of the overall account that I'm trading. So that's my kind of safeguard rail, is that when I put on a trade, the most I can lose on it is no more than the 20% of my account.
Right. And stuff that Dr. Meadows did, I mean, he taught me a lot when
Mm-hmm.
I took his course,
Mm-hmm.
and that got me going to this level. And so then I kind of tweaked it
Graduated.
to
Yep.
graduate to my level of not level, but my area of comfortness and what I'm willing to do and risk and all. And because I'm sitting here at the computer all day anyways,
Mm-hmm.
doing sales and
Mm-hmm.
figuring out cybersecurity stuff and writing
Mm-hmm.
articles, I can keep it on and I can keep an eye on it constantly. So I don't need to have the worry I got to have a stop loss because if I walk away, something could happen because I
So
don't
I
walk
agree. I
away.
agree with you on that, DeVale. So once you graduate to a certain point, you have to, every trade that we do out here, that we do here at Dorian Trader, you have to kind of marry it or adjust it to your temperament. If not, you're never
Yeah.
going to have the conviction that you should. And DeVale, I'm not going to say his percentage yet, but DeVale won the contest for June, and it was a phenomenal percentage.
And
So,
it's going to be that or higher so far this month.
Oh
wow,
my gosh.
wow.
So the other quote I remember, Devel, from our discussion was treat it like a business and it will pay you like a business. You treat it like
Exactly.
a hobby, it will not pay you